Are you a business owner that claimed the employee retention credit and now you're starting to get a little nervous because you're starting to see all the news articles about all the fraud out there and the criminal investigations and all these people having to pay back fraudulent claims? If so, you need to watch this entire video because I'm about to talk about an IRS Voluntary Disclosure Program that could save you lots of money. But let's talk about what happened to most people. A lot of people went to their CPA, their trusted advisor, and they told them they did not qualify for the program. But then the business owner was on TikTok late at night, or maybe Instagram, or they got a call from a trusted tax advisor or a letter in the mail, and they told them they did qualify for $26,000 per employee. And you're like, that sounds great, let's do it. And they filed a claim and you got your money. But now you're starting to get a little scared. Well, the IRS has came out with a voluntary disclosure program. We're about to review it, the pros and cons, and all the requirements. So first, there is a deadline to participate in this voluntary disclosure program, and that would be March 22nd of 2024. In order to do this program, you have to file for this program by that deadline. Next, who can take advantage of this program? Well, you can't already be under criminal investigation or been notified of a criminal investigation. You can't already be in a civil exam for the period in which you're applying for the voluntary disclosure program. You can't have received a notice from the IRS asking you to pay part or all of the claim back. And lastly, the IRS cannot have any information directly or indirectly regarding your noncompliance. Now, why would the IRS do such a thing? Well, there are many reasons. The IRS has received so many fraudulent claims that they can't possibly go after everybody. So by allowing some incentive for people to self-certify themselves as not qualifying, that could save the government a lot of money and help them recover a lot of fraudulent claims. Now, taxpayers won't normally just do this out of the goodness of their heart, so there has to be some incentive for the taxpayer. So we're going to cover what some of those incentives are. So the biggest benefit here to the taxpayer is that the IRS is not going to require 100% of the credit to be paid back. They are only going to require 80%, even if the IRS paid interest on that claim. Now, if you can't pay the full 80% back at the time of the closing of the agreement, they will allow you to provide a 433B, which is a financial statement to determine a payment plan. However, that payment plan can come with interest and penalties and will cost more. Now, why is the IRS saying 80% and not making people pay back 100%? Well, that is because many of these taxpayers were scammed by these promoters and these nationwide credit mills, and we were charging large contingency fees ranging from 15 to 30%. So the IRS is trying to help the taxpayer because a lot of taxpayers were scammed out of the fee for preparing these fraudulent claims. So this is a big win for taxpayers and having this reduction and participating in this program. Now, the IRS is also interested not only in recovering a lot of their losses, but also in obtaining information. So one of the things I wanted to point out in this notice here, to qualify for this program, the employer must provide the IRS with names, addresses, telephone numbers of any advisors or tax preparers who advised or assisted with their claim and details about the service provided. Now, the IRS wants this information because they are looking for the big fish, the promoters, the people that scam the American taxpayers and the government out of billions of dollars, right? And that's why they want this information. They want to figure out who filed all these fraudulent claims so they can hold them accountable civilly and probably criminally. Probably more likely criminally. So they do need that information, and that is another reason for doing this voluntary disclosure program, because a lot of these fraudulent claims were filed by ghost preparers, meaning the preparer didn't necessarily put their information on the return when they were submitted to the IRS. Now, you can file for this program by filing Form 15434, and if you use a third-party payroll service, you will have to apply through that third-party payroll service. I know this was a long video, but what I am saying is, if you did this and you are now unsure, there is a very limited time to participate in this voluntary disclosure program. And by participating in this program, it could save you a lot of risk, a lot of heartache, a lot of money, and a lot of time and effort. So what you should do is you should hire a licensed tax attorney. That could be me, that could be somebody else. But right now, I'm not your lawyer, okay? But you should hire a licensed tax attorney to review your claim. If you and your attorney determine that your claim is not legitimate, then you should discuss a voluntary disclosure program and considering applying to this voluntary disclosure program. Now, there are pros and cons of doing the program, not doing the program. And obviously, if you don't do the program, you run the risk of getting audited and then having to pay 100% back, plus interest and penalties, and a lot harsher consequence, right? But again, I'm not your lawyer. If you want me to be your lawyer, all you gotta do is click the link in my bio, schedule a meeting with Alyssa one-on-one, and I'm happy to review your claim to discuss whether or not we should participate in this voluntary disclosure program. But again, it's a limited time opportunity to participate in this government program regarding the ERC voluntary disclosure.